Welcome to Monet's Trading Academy. Excuse me. What we'll be talking about today is week two practice support and resistance. We'll be learning to identify key levels and mastering support and resistance recognition. What we need to know about support and resistance is that they are two funda- foundational concepts in technical analysis. So again, support and resistance are two foundational concepts in technical analysis. Understanding what these terms mean and their practical application is essential to correctly reading price charts. This is called a price chart, okay? You have your time frame down here in months or in years, days, so forth and so on. So you have days, months, years. You can do it in weeks. You can have it in minutes or in hours. And here's your price. Okay. This is what we call a price chart. Now, price moves based on supply and demand. We're going to talk about supply and demand in the next coming weeks. But first, what we need to do is understand that when demand is greater than supply, price rises. When supply is greater than demand, price falls. Sometimes price will move sideways as both supply and demand are in what we call equilibrium. So, when price rises, we're in a bull market. When price falls, we're in a bear market. And when price ranges or moves sideways, also known as a consolidating market. We talked about that in week one when we talked about the different trends in the market. We talked about bulls, we talked about the bear, and we talked about consolidation. Okay, so now we're going to be moving forward. Um, like any concept in technical analysis, the explanation and rationale behind technical concepts are relatively easy, but mastering in their application often takes years of practice. So even though that you're going to be having a 12-week course, this is going to develop over years of time. I have been trading for 4 years now and I'm still learning. So make trade your trading a life learning process, okay, over time. Excuse me. So the key takeaways that you need to know is technical analysts use support and resistance levels to identify price points on a chart where the probability favor a pause or reversal of a prevailing trend. That's number one. Number two, support occurs when a downtrend is expected to pause due to a concentration of demand. Okay, point three, resistance occurs when an uptrend is expected to pause temporarily due to a concentration of supply. Point four, market psychology plays a major role as analysts, traders, and investors remember the past and react to changing conditions to anticipate future market movement. Okay. And point five, support and resistance areas can be identified on charts using trend lines and moving averages. Okay. We're going to talk about moving averages later on in the week. Now we're going to get into the nitty gritty. What is support? In a downtrend, support falls because there is an excess of supply over demand. The lower price goes, the more attractive price becomes to those waiting on the sidelines to buy the shares, the asset, the crypto, so forth and so on, okay? Or currency, forex currency. At some levels, demand that would have been slowly increasing will rise to the level where it matches supply. At this point, price will fall down. Okay, so that means price will stop falling, and this is support. So let me go ahead and demonstrate that. As you can see here, I have what we call a ranging market, where the market is just moving sideways, right? and then we see a drop down. But before we get there, let's just map this out. So here's support. Support is always at the bottom. Okay, so I'm going to put a line there. And as you can see, what I was just saying, in a downtrend, right, we can say that this is slowly moving down from here to here, slowly moving down, but it's still ranging, it's staying within this range. So let's draw this. Okay, so this would be considered a downtrend. Okay, so in a downtrend, price falls because there is an excess of supply over demand. So we have what? We have a lot of sellers in the market. This is why we're going back down to support, right? That means the lower price goes, the more attractive price becomes to those waiting on the sideline to buy the asset, the shares, the cryptocurrency, or whatever financial market that we're in, we're looking to buy. So as you can see, price is at its highest. And then now as price is declining, like I just explained, right? As the lower price goes, so as lower we go, as we can see, if I open, my apology guys, I'm gonna probably need to go grab a drink of water. We see that price hits our support, right? And as it hits support, it's telling us what? That we have buyers on the sidelines waiting to purchase. At some level, demand it says at some level, demand that would have been slowly increasing will rise to the level where it matches supply. At this point, price will stop falling. This is support. So here we go. This is what we get. Price stops falling, and this is support, and now we're buying up. Okay. So from here, go ahead and do this. So from here to here, we're in a buy. As you can see, we're going up. And let me change that to blue so we know that we're in a positive. Let me change this to red so we know we're on a decline. Nice and dark red. Okay. And then we have the buy going up. From here to here, we bought up. And that explains it. Now that I've already talked about what is support, let me show you how to identify support. How do you do that? So what you want to do is as you have your chart, right? You are literally going to see where the wick is. So let's talk about that. So support levels indicate where there will be a surplus of buyers. In this way, resistance and support are continually formed at the price movement up and down over time. And then the reverse is true for an uptrend, okay? Because we're talking about a downtrend right now. In the most basic way, this is how support and resistance are normally traded, okay? So, how do we identify? What we're going to do is we're going to look at the candlestick chart and we're going to see that there's wicks. And I want to show you we have wicks here, right? We have wicks. These are wicks, what's pointing out. And then we're going to see where price, let me make it bigger. See, we get a closer look, we see here that we have a candle wick or a shadow, and it's touching my line. That is what we want to call, that's where support is identified, okay? Now, what we also want to do is we want to condense our screen and see where has price touched this line again. As we can see, price has touched here and has broken through. So that will be one, two, and then in this area again, three, and multiple more times. So we have confirmed that over time, price has been at for the cryptocurrency of Bitcoin against the United States dollar. So in the crypto market, we see that $22,880.20 price has touched here multiple times. Now, when we go to our current trading area, we will see that price has fallen below, and then we are here, okay? But as of right now, we're just talking about this time frame. So this is what we would consider our support level. Now, once we have identified our support level, now we want to identify our resistance. So let's look for our resistance level. We want to come up to price's highest point, which we already identified is here, and we'll put another line. And we're going to make this line red because we want to know this as our resistance, and we'll make this line green because we want that to be known as support. And the why we're doing that is one, we want to sell here, we want to buy here, right? So we see that prices hit one, two, at least twice, right? So that's a good resistance level. I like to have at least three confirmations, but I'll take two, considering that within this time frame and in our current trading area is here, where this would be great. So we have two, one and two here. So this is our resistance. So resistance is at $25,276.80. That's our resistance level. That's where the sellers, okay, that's what the sellers are doing. They're selling Bitcoin at that price. But the buyers are not interested in anything that the sellers have to offer until we get to $22,880.20. As we can see here, we have a lot of buyers at this level. Okay, so this is how you identify support and resistance. Now, if we go to our current trading area, we're going to do the same exact thing. So I'm going to move this over. I'm going to get rid of this. And we're going to do the same exact thing in our current trading area, which is right here. So as you can see, the market is just ranging. We had a nice drop, so this is our downtrend, and then we started ranging. So what we're going to do is we're going to do what we call a horizontal supply and resist supply and support and resistance. So we know that resistance is here, right? This is our area. Put a nice here, and this is our, here's our support, and here's our resistance. So as we can see here, prices touched, and I'm gonna make it a little bit bigger so we can see it. Right, prices touched at least once, two, and three times. Then we got one, two, okay. So prices came close, at least one, two, we got touches here, okay? So this would be our resistance and our support. Now, how did we find it? What we did is that we looked for how many times has price touched here. So we got one touch, two, three, four, five. So it's touched multiple times. How many times has it touched support? One, two, a whole bunch more times here. And then we're coming back to our trading area. Okay, so we have confirmed that this is a trading area of our resistance and support levels. Okay, so now our support and our resistance has been identified. Okay, now plotting support and resistance level, one thing to remember is that support and resistance levels are not an exact number. Oftentimes you will see a support or resistance level that appears broken, but soon after find that the market is just testing it. So as you can see, this would be considered broken. You see how we have a huge drop here? We have a nice range. We're literally have some nice movement here. Then it drastically drops. So it's broken. It's not together. See, we just have price. This is price is not together. just a huge drop. And then now we're in another trading area, right? So that would be considered appears broken. But soon after we find out that price was just testing that area. Now we need how we're gonna find that out is does price literally recover and come all the way back up to the to to the 23,427? So $23,427. Does it come back there? And we won't know. We're going to have to see what price does. Now, with candlestick charts, these tests of support and resistance are usually represented by the candlestick shadows or the wicks, what we just discussed. These are wicks at the top and wicks at the bottom, or also known as shadows. Notice how the shadows of the candles test the level. Ready? As you can see, it's testing its resistance, and it's testing at what? It's testing at 22,502.50. That is a resistance level. But your support level is where? Support is at $22,125. At those times, it seems like price was breaking support. Okay, and it did. You'll see right here, it broke support. Now it says in hindsight, we can see that price will merely test that level. So, how do we truly know if support and resistance were broken? There is no definite answer to this question. Some argue that a support or resistant level is broken if price can actually close past that level. However, you will find that this is not always the case. Let's take our same example from above and see what happens when the price actually closes past the support level. So we have support, and then you can see we're coming up and closing here, but we're also just coming back down, and we're probably going to go back up. So that means we're what? We learned about trends, right? When we learned about trends, we learned that what? We're either in an uptrend, downtrend, or ranging trend, also known as moving sideways or consolidation. As we can see, price is just going by impulse, going up, going down, going up, going down, going up, going down, going up, going down. So price is just touching our resistance and our support level within this price range. So that's why we say this within this price range from 22 $22,499.20 to $22,125 even is our trading area. This is our range. Okay? So that's how you are able to decide where is your trading point. Now, what you need to understand is fake outs, breakouts, and test. And we're going to be talking about that later on. I'd like to I'd like to thank everybody for joining the Monet's Trading Bootcamp, and this is week 2. Practice identifying support and resistance levels and identifying how to recognize those key levels. So, again, let's go over it one more time. You want to you want to condense your screen, and you want to make sure you're able to see the wicks, and you want to go where price is trading currently, right? So we can go to the highest point where price has touched, or we can go to the lowest point. I'm going to say we can actually drag the lowest point here. Okay. So our new support level will be $22,011.60. Has price touched there in the past? Let's see. It has. 1, 2, 3, 4, 5. So we got more than 3 touches, right? So that will be an accurate account. And then once we have identified, we can now look to see where price is going. Is it in a bull trend, bear trend, or ranging trend? I identified that it's a ranging trend.